Welcome to Lockbox, a podcast providing real estate professionals with action items for success. My name is Jeffrey Brogger, and I'm going to be your host. I'm the founder of two real estate marketing and tech companies, STEEZY.Digital and RealNurture.io. In this podcast, you'll learn from top 1% real estate and mortgage brokers the exact secrets to their success. Welcome to Lockbox. Welcome to Lockbox. My name is Jeffrey Brogger, and I'm here today with Matt Faircloth. Matt, thanks for being with us.
It's great to be here, Jeffrey. Thanks for having me.
Yeah, absolutely. So why don't we start off and you can tell our listeners who you are and where you're from.
Awesome. Thanks. So let's see. I'm Matt Faircloth. I grew up in Baltimore, went to Virginia Tech for college, got a degree in engineering because people, when I was growing up, told me that you're good at math and science, and so you should get a degree in engineering. And so I did that, not knowing what an engineer did. Grown-ups tell me that's what I should do, so I'll do that. And so I went and got my degree in engineering from Virginia Tech. And by my senior year, I figured out that, I don't want to be an engineer. This doesn't sound like fun to sit on a desk. And, I had the brain for it, but I didn't have the personality for it, if that makes sense. So I got a job in technical sales, and I sold for a company called Ingersoll Rand for about 7 years as one of their traveling salesmen. Bopped around a little bit. I was not adopted as a 20-year-old. I was adopted as a 3-month-old. And I'd begun the journey of finding my birth mother. And I had found her when I was living in North Carolina working for Ingersoll Rand. And so within about 3 to 4 months, I moved from where I lived in North Carolina to Philadelphia to be closer to my birth mother and to build a relationship with her and also be closer to the parents I grew up with. So in that transition, I settled down in Philly and met a lovely young lady that was graduating from Penn, University of Pennsylvania, who put a copy of Rich Dad Poor Dad in my hand. And that is now my wife, Liz. So she got me to read that book, and it blew my mind and completely changed everything for me. And it caused me to take a big commission check I had made from Ingersoll Rand, big for me at the time, and I'd maybe go out and buy a piece of real estate. I went out and bought a 3-bedroom, 2-bath, moved in. We got 2 of my drinking buddies to move in with me. They both leased bedrooms from me for $500 a month a piece, and my mortgage was $940. So I was making $60 a month and living there for free at like 27 years old or so, right? That was all I needed. That was the Kool-Aid that needed to be drank by me to sell me on the possibility of how powerful real estate was. And I was able to pay off all my student loans, pay off all my credit cards, get myself completely bad debt free within about a year and a half. Still dating Liz at the time, and then started buying rentals around Philadelphia while we were dating. Not before and then we got married, and I quit my job to become a full-time investor. And we lived off of her income for years, a lot longer than we had planned on it, but we lived off of her income while I built the DeRosa Group, our business. We now are apartment building owners, single family, small office building owners, done about 4 dozen fix and flips, and we are fully immersed in full-time investors. And we've been that transition of me quitting my job was 15 years ago, and I've been full-time since then.
Awesome. I love the story.
Thank you.
How your now wife handed you Rich Dad Poor Dad. I am also a rich dad guy. I was not handed that, but I don't even know how I discovered it, to be honest with you. Everybody's
got their rich dad story. Everybody's got their story on how that book came in, right? Yeah.
Like the first time it was introduced, or like how old you were when you read it. Like everyone's got that story. Such an influential book. And mine was that unfortunately my father passed away when I was 16. Mm-hmm. And through that process, he willed the family home to myself and my 3 sisters. And at that time, the question is, do we sell it? Right? There's so much going on, total chaos. Do we just sell this thing? And it happens a lot. That's why probate is a thing. A lot of investors pick up houses that siblings are like, I don't know what to do with this. I don't want to pay the tax liability. We decided to keep it. And I was only 16 at the time when my sisters managed it at first. And at 17, I read Rich Dad Poor Dad, and I thought, I already have an investment property, but I already have it. And so, I started working hard, doing sales, and I slowly over the years bought my sisters out. and continued to manage it as an investment property. And that was kind of like my introduction to real estate, the power of it. And I held on to it for 12 years. We just sold at the peak of the market, a couple of months ago, and made a nice chunk on that. So excited.
Cool. Congratulations.
Continue going. Thank you.
Yeah.
And so I'm with you on the rich dad journey, and just being exposed to that mindset, I became convinced that real estate investment is a means to achieve financial freedom.
Yeah, it absolutely is. And I've heard old adages and statistics that just say the majority of millionaires in the world made their money or keep their money in sticks and bricks. It is an asset. Above all of here's why though. It's not like just real estate is a millionaire maker. Real estate's an asset. And in inflationary economies and all those things. And, Rich Dad Poor Dad talks about taking us off the gold standard and all this other stuff. So you're in an inflationary economy where a gallon of milk is going to cost more tomorrow than it does today. Assets ride up that curve better than anything else. So real estate is likely the most accessible and the most understandable asset, and the one that you can leverage with debt and everything like that. It's hard to leverage most other assets out there. So that's why real estate, I think, does so well for people, because you control the whole asset and the whole asset's growth with a fraction of the purchase price.
Right. And not to mention, if we zoom out from the United States and go to a global scope, in the United States, we have the unique opportunity to have a fee simple estate where we own it. In other countries, that's not even possible. The government owns it. Right. And so the fact that we can own that as an asset, leverage it, rent it out, have the mortgage paid, we have so much freedom in real estate.
We do. Not to go too far down the libertarian road with you, but there's countries out there that don't charge, we do own it, but the government still has the right to charge us for the rights to use it or the rights for its location, right? And let's call that real estate tax or other fines and fees or whatever the government has the right to charge us on it. There are countries that do not have real estate tax. So when you own if you own a piece of real estate with no mortgage on it, you own that real estate, and the government can't come along and say, well, we're going to reassess you. And I know you were paying $10,000 a year in real estate taxes. I decided that your property's worth more, and you're going to pay me $25,000. And if you don't, I'm going to come take your property from you. Right? Meaning the government they have the right to charge us handling fees and privilege benefits for, let's call that tax where the property's located. And if we don't pay it, then they can come and take it. So they kind of have collateral on us. You're right. It's the best gig out there. And I don't question our country's freedoms, but it is one of those things where it's it is, but there's still some strengths, Yeah. And then and property taxes are good things. My kids get to go to school where I live because I pay real estate taxes, and my roads are paid because I pay real estate taxes. But it is one of those conversations about, it's still a good gig. I'll leave it there. And then they're not going to come take it from me unless I don't pay my bills.
Yeah, exactly.
Yeah.
So I'm curious what your single most important action is that you take on a daily basis that has attributed most to your success. Do you have any success habits that you can point to?
Sure. I get two. That one kicked in at the beginning of this year, which is pretty much every day I move my body to the point where I break a sweat for at least 20 minutes. So that's been something that was I hate to say it, but a New Year's resolution for 2021, right? And I've lost a good amount of weight, and I also just have better energy. More above all else, I just feel good, and the weight loss I've had is nothing compared to my energy boost, right? So that's my first thing, is I just have a habit, and I've only missed maybe 3 or 4 days in 2021, all in. And that's one thing. Second thing is that I do, and I've been doing this one for probably 5 or 6 years, and I attribute it to, this is the lazy man's organization system, because I am a professed lazy man. I'm a professed finder of the shortest route. That's my engineer in me. So I plan my year, right? And then I take my year plan and I break it down into this thing. This is less complex than it looks like. This is my weekly planning document, right?
Nice.
And so that is everything on here from my health goals, my relationship goals, I have 4 sisters, 3 sisters myself. So which of my sisters am I going to call this week to check in and get chatty with? How many times this week am I going to call my mama? Seriously, Call Your Mom is on here, and all my business goals and relationship goals with my wife, everything, my kids, is all on this weekly sheet. Then I take that, and each day I plan out my day, my work day. I don't plan out my fun or my off days, but I plan out the days that I'm in the game and in business. I plan them out every day, and I'd make this, right? And this is called my go, call, do sheet. And I put where I have to go, and this is a go. Goes are on the calendar meetings, right? And so this is a go, right? I can cross it off right now. I can cross off talking to my buddy Jeffrey on a podcast, right? So, okay. But then I've got all the other stuff I have today, and then I have next to it the calls I have to make. And a call, what I like about the call thing is a call is something you can do whenever you want to do it. At some point, I got to call that broker and chat with him for a little bit about the deal that he told me about a month ago. Just follow up, right? Calls can slip in. Then there's the do, and the do's are longer action projects, things that might take me more than 15 minutes to do, and I've got to kind of book those on my calendar. So what I do is I put my goes in, all my appointments, and then I schedule what I'm going to do, the do things. Like I've got to work on this loan application. I got to assemble all these water bills and send them over to a title company, like fun real estate people stuff, right? And then in between those things, when I'm in an intermisu, when I'm in a gap or whatever, I'll burn out some phone calls. So that's the level that I plan my day. And I also make sure that I've got big 1 hour to 2 hour gaps in between things so that I can just be a little bit in response mode, but also, doing my doing and my calling and all that in between. So that is again, it's just a handwritten sheet. I probably could put all this in Google Calendar, but it helps me stay focused by writing it down. And I love being able to cross things off my to-do list. So I like to handwrite it so I can strike it out. And I do use my little Yellow legal pad because when I'm talking to people, I just take notes on my Yellow legal pad when I'm talking to them. And this is just my notes it's again, lazy man, my schedule and my notes for the day, all on one page,
All on one page.
So, yeah, but by the end of the day, it's just full of crosses and arrows and scribbles and people's phone numbers and all that. And at the end of the day, I just take it and decompose what's there and put it into I sweep it up into longer archives or whatever if I need to. Right.
You'll transfer it then to your CRM or whatever, and then throw the single sheet of scratch paper away.
Upload it all. There's been days where I don't get it all done. And so I just carry that scratch paper around the next day. I write my new go call do sheet, and I've got the one from yesterday. And so I'll carry them both around, and I'll knock out yesterday's go call do's, and I'll knock out today's go call do too. So,
I like that.
Lazy man's personal organization system.
Hey, it works for you and is a great principle to do your annual planning, break it down into quarters, months, and weeks, and then have some type of weekly structure that it has recurring activities as not only business. I love how you mentioned the relationships, because
call your mama
in a relationship business, but if your relationships and your personal life are suffering, your business is going to suffer. So I love the focus of multiple different areas of life. Tony Robbins talks about the different pillars in your life. Yes. And I'll probably won't be able to think about all of them right now, but it's something along the lines of finances, relationships, your, love, connection, wealth, health, everything. It's not just business. And I think we've all been guilty at times of pouring too much into one thing and letting the others kind of slack. And we all know how that feels. So really good.
It's easy to go all in on money and success. It's easy to go all in on that, right?
It's easy.
But that's not what it's about. That's part of it, certainly, but that's not what life is all about, really. And if you're going to plan your year, you got to plan in, the things that matter. I plan in, there's a book called the Family Boardroom, and it encourages you to take, time away with your kids. I have multiple kids. So one kid with me for 3 to 4 hours, just talking stuff out, planning some fun. And my daughter's 4, my son's 7. So they're young, but I still take time away with them. And I let them do whatever they want to do. Tell me which one. You want to go to the beach? Great. Let's go to the beach. They get private date time with daddy. And it's once a quarter. And we do of course I hang out with them every day, but for them to get that one special time like that, just me with them one-on-one, not mommy and daddy, just me and them. If I didn't plan out my week and my month and my year, I wouldn't get those dates in, because they're all things that nobody in America would say that they don't want to do stuff like that. They all want to go hang with their kids for a half day. Oh, God, that sounds awesome. We all want to do that, right? those that do it are ones that plan it, right? If you don't plan these things, they're not going to happen. They're just not, because we all want to do them, but I want to do a lot of things. I want to learn how to run a marathon, but if I don't start training for it and put it on my calendar, I'm not going to do it.
Got to put it on the calendar. Super important. So I think that a lot of my listeners who are top agents or, top investors out there, they're thinking that all sounds great, but if, business isn't creating that freedom, then I don't have the time to do that, which might be a fallacy in and of itself. But I want to ask you about your lead generation, right? Where are the deals coming from? That is always the big question. So do you have like a number one most profitable lead gen source or anything you want to share?
Yeah. So what we do as a company, and I have something to say to people that are listening to this going like, well, I'm a one-off real estate agent and all your weekly plan sounds good, but what if my phone rings and it's somebody who wants to sell their $500,000 house with me? I need to take that call. You do. But it doesn't mean that there's also a concept of the who, not how, right? And the sooner you can put people in to handle the first iteration of response mode, of like to handle that first level of when items or issues and emergencies or deals or leads or opportunities come in, you've got somebody who's there to receive those things, screen them, filter them, and then bring the most important ones to you very quickly so that you can close them. The better off you're going to be. So to that point, my company, we raise capital from passive investors that are, either accredited, not accredited, dealing with cash, dealing with their IRAs. And we put that capital to work in mostly multifamily real estate, but also in fix and flips and other real estate ventures, right? So we are a real estate investment concierge, and we put people into passive, 100% passive, invested through us, not their own deals, invested through my company types of deals. So they're called syndications. So my leads are apartment buildings that we want to buy or people that want to invest with us. Those are our avatar. Those are our attraction points. And so I have people that are my partners whose job it is to go out and find deals, or whose job it is to receive inbound investor traffic. And I also have an automated system that receives that's able to scrub those leads as they come in, like web portals and that kind of thing. Because I find that if somebody really wants to work with you, unless they're in distress, you probably don't need to answer the phone right when they call. They can work their way through a system, and I don't agree with the whole, like, oh, you got to strike while the iron's hot. You got to answer them right when they got their checkbook out and stuff like that, perhaps. But you may lose one or two of those over not having to deal with a lot of duds that come in that are not real leads that need to get processed and verified and validated in a very quick time frame. So that's our lead gen process, which is just people that are filters between me and the lead, but also like something to screen out to separate the wheat from the chaff.
Yeah, makes total sense. And I don't really have like an army background, but this analogy is coming to mind. It's like you have your infantry unit and they're on the front lines, but the general isn't there because he needs to be looking at the entire army and making strategic decisions. You got to be removed at least one layer, and you sit up on the horse looking at the whole thing, right? And when there's an actual opportunity, boom, then you step in. So with that, it's an important layer to have. With your deals that you're doing, I'm very curious, like what your unit range is, because I don't know if you know much about my background or what I'm doing now, but I have a real estate marketing agency that specializes in primarily lead generation, but we do branding, advertising, copywriting, a bunch of different stuff. And nowadays I have my commercial real estate license. I focus on multifamily, 5 to 50 units, and sourcing off-market properties. So I'm very curious about your, your mix. Like, how many units are you going up to? What's your preferred, specifically in the multifamily space?
Yeah, so we buy, our big affinity is for stuff that's like 80 and above. But that's, a lot of people want that, 80 units and above.
That's why I go to 50, because it like removes a lot of that bigger fish competition. There's like a little niche there.
And I'll tell you why bigger fish want 80 and above. Above 80 units, typically your business plan, your cash flow is spinning off enough that you can support payroll. Meaning, like, you can have at least 1 to 2 staff that run that 80 to 90 unit for you, which means you do that, you've got on-site staff. Okay, great. Now I can live anywhere, right? Now I can own that 80, 90, 100 unit, and that property could be in Kentucky, in North Carolina, in, Maine, wherever, in Texas, wherever it is. I can hire a property manager that can have on-site staff in the property. That's why there's affinity for it. But we really like those kinds of deals, but also just like you, I get that they're very competitive. So we have a model that we can acquire, we're under contract on a 32 unit right now. So 30, 40, 50, mainly because I really like that range, and it kind of gets overlooked in multifamily. But there's a great sweet spot. A bunch of reasons. They're typically owned by older operators that are trying to age out, like air quote mom and pop. Not that I'm trying to take advantage of mom and pop, but mom and pop typically own the 30, 40 unit, and they can make a good living once they own a free and clear, a really good living on a 30, 40 unit. So they tend to own a lot of those. That's who typically owns stuff like that, not corporations and everything like that.
Right.
Number one. Number two, deals like that are typically too big for the really small, newer investors, and they're typically too small for the big investors. So they just get, when a guy that owns a bunch of 2 units sees a 30 unit, I wish I could. Nah, I don't know how to do that. Got it. When the guy that owns like a couple thousand units around the corner sees a 30 unit, why would I mess with something that small? I can't make the fees I need to make on something like that. So they're a great little sweet spot. My favorite property that I own, my favorite one that pays me very, very well, but also just a cool property that does really, really well, runs off the handle, is a property in Lancaster, Pennsylvania, and it's a 49 unit apartment building, right? Most people wouldn't touch it, but it is a just gem. I love it. I love the structure. I love the tenants. I love the collection ratios. It's an old converted factory. Just really cool building, aside from everything else. 100% collected every month. It's a great location, and I'll try and keep it forever if I can. So some of my favorites are properties that size, but they get overlooked.
Yeah. No, absolutely. Yeah. It makes total sense, and I'll be in touch after to add you to my investor list and send you some deals.
I'd love to talk to you. And we have but the best thing is we have ways to finance deals like that, right? Right. Through the syndication model, through investors coming in with us and everything like that. So we can give investors exposure, because investors still get a big tax loss if I can buy something like that and do a cost segregation study. I can provide a lot of benefit to people in that. And I probably wouldn't do a really small deal because there is like a point of diminishing return. But yeah, we would certainly do stuff like that.
Sure. And part of what my company, Brogger Realty, offers as well, it's an end-to-end solution. So we do help with tax consulting at the end. And within my network, through doing interviews like this and being in the real estate marketing space for years, we have an incredible network that can help them from being a property owner that's waiting for the perfect 1031 and just like can't escape this one property that they have, to now they have a tax deferred lump sum that now they can do many things with, and we can kind of help with that whole process. So yeah, it definitely something we can touch on. But to keep the podcast rolling for our listeners, where do you think the industry is heading in the next couple of years? What
multifamily, real estate in general, multifamily, which industry?
Macroeconomic, just everything.
Oh boy, the big industry. Yeah, right.
Yeah.
I mean, you know what, Jeffrey, my crystal ball is broken. I don't know, but yeah, I know, man, I can't get it fixed. I can tell you what I'm seeing. I'm seeing a lot of overspending. I'm seeing a lot of overexuberance, and I'm seeing a lot of probably overconfidence and cockiness going on. As much as people are out there talking about like, oh, COVID and the Delta variant, and we're going to go back on a lockdown. No, I don't think any of that's really going to happen. I think that America feels pretty good still, but economically, and I think that we're probably missing something. Because of that, we're probably missing something. And I think on top of that, a lot of money got thrown into the system. We're propped up on certain things that we're not sure what's going to happen when those props go away. Those would be, list them out: mortgage forbearance, eviction moratoriums, and unemployment. Right? Jacked up unemployment benefits. So when those things start to dry up, I wonder if we're going to see if the emperor's wearing clothes or not. because the stock market continues to go up and that. But alternative assets are blowing up, Jeffrey. So I think that people are looking for something. Like, look at Bitcoin, man. I mean, it's all over the place. Real estate, all over the place. Investment in alternatives is taking off. And I think it's because people are they're making a lot more. They're socking it away for either just in case another COVID happens, or just in case, the bottom falls out and we all end up living in snow caves again. I don't know. So I think that we've got a really good party going. I hope it keeps going for a little bit. I'd love it if the pot of boiling water wasn't as hot, if we could turn it down a little bit, instead, because you know what happens when things overheat. At some point they pop, right? I'm not seeing what would cause it to pop directly, aside from the things I just listed, but I don't think that those are things that would topple our economy. I just think that we might see a really reasonable correction on being all the way up here to okay, this is where we're supposed to be down here, right?
Right.
Yeah. I'm not, even though I'm a Kiyosaki student, right? I'm not one to say, like him and Peter Schiff might say or whatever, is that we're looking at a burst, is that we're looking at like an economic topple of our system. I don't see it. Don't know why. I don't know why. That's just not what my gut says. And that I think we're going to continue to buy the right assets. We're going to continue to buy things that cash flow today, not bet on appreciation like a lot of other people are. We're going to continue to make deals that make money today. And if things slow down or have a correction, then the deals I bought will continue to make money, because real estate tends to continue to make cash flow. Even if real estate values go down, rents don't correlate with that.
Right.
So I think that's my thought. What do you think? What do you think? Give me feedback.
Yeah. Great principle that you mentioned in that explanation of focusing on assets that cash flow today, rather than assets that you're banking on appreciation. Oh, we'll sell it in 3 years. It's like, careful with that. Yeah, I like that thought. I'm also a student of Peter Schiff, and I hear that side of it. The radical capitalist side of it, like, oh, everything's going to burst and we should just go back to total free market capitalism and this and that.
I've heard Peter's side. Yeah.
So I hear you on that, and I don't want to go too far down that road.
I heard a Peter Schiff joke. Okay, and this is from Robert Helms when he spoke at Dealmaker Live. He's one of the real estate radio guys, right? And he was talking about Peter Schiff and said it with love, which is fine. He's like, Peter Schiff, who has predicted 19 of the last 2 recessions. Like I like him. I like what he has to say, but he's a perma bear, right? He's just talking. All he does is talk about how the world's going to end. And if all you do is that, then you kind of start to come off like Chicken Little, Because at some point, the sky's not falling. At some point, the world's not going to fall apart, because it doesn't ever. At some point, we kind of figure things out. And maybe this is my inner optimist, but I'd like to believe in my later times in my life, I'd like to believe that whatever happens, even if we have to have an economic reset, we'll figure it out as a country. We figured COVID out. We bounced back a lot faster than some people thought we were going to on this. So
absolutely,
I think that this is just an American thing. I think that there is human resilience that economists can't quantify, so they don't count on it. But I think that human resilience is the one unknown factor that you can't put in an algorithm, but is there, and we all know it's there. So
that's also a great point. Yeah, I mean, economists are looking at numbers, statistics. Econ always resonated with me because I like statistics and how you could look at bell curves and look at predictive graphs of like, oh, well, this makes sense. But the human resilience, it's so true. And so many people thought that when COVID broke out, there was going to be absolute rioting, collapse of society. And what happened, there was a little bit of unrest.
There was some riots. Not just because of COVID, but that was like, we were a pot of water at 211 degrees for a very long time.
But at the same time, everyone also banded together in a way. We were all in a struggle together. We had a common struggle to then battle, essentially. It was like kind of like we were going to war against COVID. And I really like to see that camaraderie. And, moving forward, I love the concept. I'm more of an optimist. I kind of have to like check my optimism to make sure that my risk aversion is in line with my asset allocation formula that I have for myself. Cause I'm like, life is good. We'll always figure it out. Like it's going to keep going up. I'm kind of that kind of guy. But, overall, I have a very optimistic outlook on the future. Yeah, I think that things are overinflated. There's too much money in the market that has been printed. We should go back to the gold standard. But all these things, in and of itself,
America, you and I both know that's not going to happen, right?
It's never going to happen.
Not going to happen. No. You can't put Pandora back in the box.
No, definitely not.
So we either need to keep printing money. You ever heard of a concept called a debt jubilee? That's what I think happens. Okay. Again, this is rabbit hole thing. And this is something that people like Peter Schiff and Kiyosaki and whatnot, it would blow their mind, right? A debt jubilee is something that's happened before. A debt jubilee, what it is a economic reset. And it's not, let's all go to Bitcoin. It's, let's all make a global agreement that we're going to control alt delete our financial system. And what you do, the way that works is that, and by the way, think about it. The dollar was not the trading item when Jesus was walking the earth. At some point, financial systems come in and come out. And so a debt jubilee works like this. You look at all the debt in the world and you bring it all to zero, right? You just agree that all debts are forgiven across the board. Small stuff like my credit card and your car loan all go to zero. But national debts go to zero. Mortgages go to zero. Everything goes to zero and we start over again, right? And we just bring debt levels to zero. You reboot, go back to maybe a new global currency, whatever it may be, but you just kind of wipe everything out and then do a do-over, right? It's called a debt jubilee, and it's happened in our society. It's happened in history. Not always is it painful. China's done it a few times, like, oh my God, you're talking about a communist country. Well, they did it, and it wasn't pleasant for everybody, but it's one of the reasons why they were able to grow so fast is because they said, okay, we were just kidding. Try that again. Here's the new currency you're going to use. Here's the new debt structure. Here's the new everything, and
interesting.
Yeah. So not that I think it's a good idea or whatnot, but I think eventually that's how this printing money and national deficit and all these big snowballs we're building get cured. You're not going to pay them off.
The world declares bankruptcy.
Yeah. But if you can get everybody to win from that,
right.
Like if we all get it, because every country's got debt, not just U.S.
Right.
Right? Everybody's got debt. Even China, they got, everybody has debt. Okay, listen, we're all gonna agree that it all goes to zero, and it's not something that's going to happen anytime soon. It'll have to get a lot hotter in here before we do it. But I think that that's really the answer. And it's maybe not Bitcoin or whatever. Maybe Bitcoin or people's currency is what evolves out of that. But it's certainly not going to be, it probably will be a blockchain controlled technology, but it's probably not going to be Bitcoin, So it'll be something like that. But whatever it is doesn't exist yet.
Specifically. Right.
What's that?
It won't necessarily be Bitcoin specifically, but it will
be that coin. It'll be a coin. Yeah, it'll be a coin, maybe not that coin, Yeah. So anyway, sorry. I hope this is a benefit to you or a benefit to your show. I know we're going on tangents, but it's fun, right?
No, it is fun. And I think that it helps to alleviate the fears of a lot of investors and property owners thinking like, should I sell now? Should I buy now? What's happening? Oh, COVID. Oh, it's going to break out again. Oh, what's going on? I think that just having open conversations like this helps to alleviate some of that fear. And at the end of the day, what it comes down to, something that I learned from Tony Robbins referencing Sir John Templeton, who's like one of the greatest investors of all time. It came back to something that I alluded to earlier, which is called asset allocation. Mm-hmm. Whatever your risk aversion is as an investor, make sure that you then create an asset allocation formula that you're comfortable with. And as long as you don't deviate from that, you'll always be fine. You'll never be over leveraged. Because when things go down, it's like how Robert Kiyosaki says, it's like having a sale at the grocery store, everyone goes running. But when the economy has a sale, everyone runs away.
Yeah.
The reason why is because they are over leveraged and counting on appreciation, and they're making mistakes where when things do drop a little bit, now they have to sell. And I said something a couple weeks ago, don't buy what you can't hold. And the concept there is like, if you can't hold it through a 5-10 year period, if you have to.
I love that. Don't buy what you can't hold. I mean, that's been the best advice I could give anybody going into this, whatever the economic cycle we're going to is that, you know, if what you got is producing enough cash flow now, I mean, unless it's like something that's complete in a speculative industry and don't, I mean, people will smack me for saying this, but like Airbnb, give an example like Airbnb, you know, Airbnbs are great when the sun is shining, you know, and you can I'm making $4,000 a week people on my Airbnb. Yeah. I'm printing paper. Look at this. It's great. Okay, cool. How did you do during COVID though, when that happened? You know, like that's like when nobody went anywhere for like 6 months and everybody was locked in their houses, how did your Airbnb do? Right. You're doing better now. I get that. But when people don't have as much expendable income, you know, that Airbnb is the first thing they're going to stop going to. And I use Airbnbs. I'm not knocking them. I have friends that are making a living with them, but I prefer things that are more at the bottom of Maslow's hierarchy of needs, which is housing, like permanent, long-term housing people live in. So
yeah, makes sense. And that kind of brings me to my next question. What's your process for evaluating what to say no to?
Well, I have people that are more no people than I am. And so if left to my own decisions, I would say yes to just about everything. You know, I'd be all in on industrial properties. I'd be buying all the Bitcoin they can make. I'd be doing this. I'd be doing that. Because I get shiny nickel syndrome. And that's okay. I'm excited. I'm a positive guy, Matt, right? Jeffrey, positivity. As Matt said, my positivity, when I took the StrengthsFinder test, which everybody should take, my number one StrengthsFinder outcome was positivity. I am a positive thinking guy, which means that, and it's good to be a positive thinking person. It's a good life outlook, but everything smells like a rose when you think positivity, right? And so I see a lot of shiny nickels, and every opportunity is. So it took me like 5 years of business to figure that out, because I would get into things and they wouldn't work out, because not everything does. And so I've learned to surround myself by more people that are a little more like, you know, conservative, a little more no people than they are yes man, you know, like I am. I'm like Jim Carrey from Yes Man. That's me. So I leave final decisions to people that can give me like their vote on things and stuff like that. So that's my vetting process is. I'm not the only one. On top of that, we only look in certain markets that we're looking to buy in. I won't buy anywhere in the United States. We only buy in 2 states right now. I'm thinking about maybe adding a 3rd one, but that's it. So we're very zoomed in on what we even look at. And that helps me recover from shiny nickel syndrome too.
Nice. And did you have some kind of learning lesson that brought you to that point? You know, it's easy to look at you today and say, oh, you know, he's this successful real estate investor, but there's always a story behind that, and many failures lead to later successes. So do you have a favorite failure of yours? Something that was a huge learning lesson?
I'd make you a list. But the one that stands out the most for like the shiny nickel syndrome is that we bought and I still own this thing, and it's done well for us, and I'm happy for it. I just wonder where my life would be if I didn't buy it, but it's my office building. I have a 10,000 square foot office building in downtown Trenton. And when we bought it, we had bought like a couple of smattering of single family homes. We had bought a couple of small multifamilies, you know, in a few locations. And then this office building came up for sale, and we looked at it. And at that time, the state of New Jersey was leasing up office space left and right at like $18 a square foot. And this building was for sale for $55 a square foot. And I did the math. I'm like, well, geez, you get a third of your money back every year. How great would that be? Right? That's awesome. Well, by the time that we took us to buy it, the governor of New Jersey changed, and a guy named Chris Christie took office, right? And he just reversed all the contracts the government was in and really shrunk the New Jersey government. As it needed, it was over leveraged and overbought and overcommitted. So he shrunk down the New Jersey state government, got them out of contracts, broke a lot of contracts they were in, and their bubble of growth shrunk. While that happened, the bubble of the economy burst as well. So I'm left holding this empty office building that I thought was going to be a single tenant was going to come take it, but now Matt has to figure it out, right? And it was a dark time for us, but we figured it out, right? Never missed a payment on it. And I went in there and I filled it up full of small businesses and did like a Regis office complex kind of center with it. Right. It's fine. And it does well now. But that was an absolute shiny nickel. And if I just stuck to residential and stuck to multifamily, which is what I knew how to do, then I would have grown that much faster. And I could have bought a lot more multifamily with $500,000 at that time than the $500,000 I spent on that office complex.
Wow. Yeah. Powerful lesson.
Mm-hmm.
Powerful lesson for sure. Not investing in things that you don't understand, I think is the
We're also betting on like one out. My one out was the state of New Jersey coming in and paying me $18 a square foot. I was right in the path of progress. It made sense, but that was the only way that deal made sense, right? Was if that happened. And because it didn't happen, I'm now left holding a property that's costing me $25,000 a year in real estate taxes and, $3,000 or $4,000 a month in mortgage payments, right? So it was an albatross for a very long time. It's not anymore because we filled it up. And I got a lot of great lessons. And you know what, Jeffrey? This is what goes back to tenacity and people's resolve and everything like that. That deal was a mess, but Liz and I hunkered down and got it leased out and hunkered down and figured things out and then refinanced it to get cheaper debt on it and then bought more multifamily and then started holding meetups in the building and started made it like a real estate investment hub and put our company there. And our company started paying rent as part of the building. So we made it work. And I got a lot of lessons and I got a few battle scars in the process, but got a lot of great lessons when I did it too. And so would I do it over again? Yeah, I sure wish I could learn those lessons without going through it. But if I had to go through that to learn what I learned now, I probably would do it again. Probably would.
Right.
Yeah.
Yeah. No, true that. There's a saying that, learning from your own mistakes is experience. Learning from the mistakes of others is wisdom.
Yeah.
And I find it difficult to absorb wisdom. Usually I have to go learn it myself.
I know. Unfortunately, that's the way that it goes. It doesn't resonate as much unless you've lived it, right?
Right. Absolutely. Well, if this has been a great episode, and to wrap things up, I'm curious if there is a question that I should have asked you, or if there's anything that you'd like to elaborate on from earlier.
No, I mean, there's a lot to each of us as individuals. So we got into some really cool stuff. I mean, we don't have to go to it today, but maybe I'll come back and tell more. There's a whole story around the adoption story of me getting back to integrate with my birth mother and that whole thing, which I don't get to talk about on podcasts very often. But it's a really great story in that. So we'll do that. We'll have to do it another day. There's there's a whole journey of investing with your spouse that Liz and I went through, that the ups and downs and the highs and the lows around that too. But I'll just have to come on and tell those stories again, Jeffrey. I'll just have to do it then.
Yeah, I'd love to have you back on, especially investing with your spouse. That would be very interesting to me personally. My fiance, has been a previous real estate investor. We're getting married in September, and
congrats, man.
Yeah, absolutely. Thank you.
We're September 24th. So, awesome. Fellow September person here. Only wedding advice to you is renew your vows as frequently as you and your wife can, because you guys are going to make great promises to each other in about a month and a half, right? But make sure that you remake those promises, because the wedding is one day, but being married is a constant recommitment to each other. And so Liz and I renew our vows every 5 years. And I've heard of people that renew them every year, which is really cool. But we renew every 5. We just did our 15-year last year, which was awesome. We do like a renewal and then we do a getaway. But thank you. That's my unsolicited wedding advice.
Well, I love it. I really appreciate that. And I'm curious how my listeners can contact you if they want to bring you a deal or reach out in any way.
Sure. Well, they can do a lot of things. Well, they can simply just go to our website. And at that website, they can buy a copy of my book. If they want to hear about passive investments we offer to accredited and non-accredited investors, they can get that there too. We do have some education platforms. They can get in touch with those things at that website. And they can just get in touch with all the media that we have out there, including my podcast, my wife's podcast, all the great stuff, my YouTube channel. It's all there at DeRosaGroup.com, DEROSA Group, DERSA Group.com. That's on my shirt if you guys are watching the video. DeRosaGroup.com. You guys can hear more about us there.
Awesome. Matt Faircloth, everyone. Real estate investor and interesting human. Thanks for being on. I really appreciate it. And I know that my listeners receive some value from it.
Awesome, Jeffrey. Good having you. Good being with you. Thank you.
Thank you.
Thank you for listening. If you want to accomplish your real estate goals, then I highly suggest downloading my free Ultimate Real Estate Goal Setting Framework. The link is in the description of the show, and it will help you break down your annual income goal into the amount of phone calls, appointments, or open houses you need in order to achieve that goal. Thank you so much, and we'll see you next time.